What it do, family? What it do, family? Sorry I slept on you last week, but I hope you took that time to look and find some stocks lurking in the darker corners of our stock market. Now, with the market the way that it's been over the past week and a bit, and with few outlets for people to talk about it outside of this channel and with their friends, it seems like a good time for us to do a little more community building. After a few suggestions from viewers and from our friends over at Hanggang Magazine, we've decided to set up a Discord for those of us interested in talking about saving, investing, and life in general in the ROK. Of course, there are only about 300 of us at the moment, so chat may not be as live as it is on other Discords like Wall Street Bets or on other popular investing forums, but hopefully with more participation we'll discover a larger community than we have right now. That being said, I'll leave a link to the Discord in the description box below. In any case, today we'll be talking about something that definitely deserves our attention, especially for beginner investors out there. You're watching Sekki들, and this is going to be a quick one. Today we're talking about volume. Now before we continue, I'd like to request that you do us a favor and scroll down, like and subscribe to the channel, then click on the little bell to keep up with the content that we're banging out in the future. Also, this is just a reminder that these episodes are meant for educational purposes only, and are not meant to substitute for the legal or financial advice of a licensed and paid professional. What you do is on you, and what you should always do before doing anything with your money is research. Now let's get to it. So for a lot of long-term investors, daily trading volume and daily fluctuations of a stock are of little to no consequence over the long term, since, in general, their aims are to buy a security and hold it for as long as possible. Still, however, I recognize that for a lot of beginners, it'll be hard to avoid checking your app on a daily, bi-daily, or even weekly basis, if only to get a little bit of that dopamine hit when you see those little red numbers justifying that you've made a good decision. Naturally, the little blue digits will read as an antagonist to all of your goals, and it's a big reason why retail investors tend to turn on their thesis of a stock and pull the classic cognitive error of buying high and selling low. So today we're going to dip into the stock trader's textbook and try to understand an important indicator to them, since it's important to understand a stock's activity in the short term. Now in short, volume just refers to the number of shares of a stock that have been traded on a particular day. This will be reflected in either raw numbers that detail the number of shares that have been sold, or in a percentage that reflects the amount that has been traded in comparison to its daily trading average. Usually, when you see a stock shoot up 30% in the morning and trades all day, volume will probably be represented in your app at well above 100%, usually up to 2, 3, 400, or even up to 1,000, 2,000, 3,000, 4,000, 5,000% of its daily trading average. Now in day trading, there are some strategies that exist to use trade volume to indicate momentum. Often, momentum traders will aim to identify high-flying stocks that, with enough volume pushing the price up, will continue to soar in the short term. Thus, for them, it becomes about jumping on a rising stock and getting off at top, rather than actually investing in the underlying company and aiming to make long-term profits as they generate cash flow, grow in value, and all the things that we've already talked about in the past that value investors prioritize in their valuations. Furthermore, there are algorithms that aim to mimic momentum investing and are based on the efficient market hypothesis that market prices tend to reflect all information and should only react to new information. Thus, when stocks start to rise, momentum traders and algorithms help push them even higher. And the same goes for any falling stocks, as big money momentum traders push the swings hard in either direction. But I feel like I'm getting a little bit ahead of myself, so let's talk about what volume is and how to read it in its most simplest way. The most essential thing that volume tells us is investor sentiment. And volume tells us how much conviction investors and traders have in a trend. This is because rising prices means investors are more eager to buy and more people will be bidding for those shares. Thus, as prices rise over time, so should the volume, and the stronger the correlation between increased trading volumes and prices, then the stronger the conviction of investors buying up that stock. Now, if traders aren't as convinced about the direction of the stock, they may be less willing to buy or sell, and the volume slows down, shrinks, or stays the same. This is more helpful for traders who are buying and selling regularly, whereas investors only really care about having a good company at a fair price. But understanding these principles may still help you moderate your emotions when looking at your stock portfolio. How does it do that? Well, let's do a thingy. Let's say there's a company out there called 아저씨의 감튀 and 옹기. We see that the company has solid earnings and revenue growth over the past few months, and the stock price has risen to reflect that over time within the same amount of time. It's a generally low trading volume stock, but one day it randomly jumps up 25% in price. You check the news, there's nothing new, so it seems to have jumped for no reason at all. Is your thesis finally coming true? Is the stock finally breaking out? Well, here's the thing that gets traders and investors in a pickle. It's easy for institutional or individual investors with big money to manipulate stock prices when the trading volume is low, because all you would need to do is make a few trades that make the stock look like it's moving and start getting others to buy or sell. Alternatively, anyone looking to manipulate the stock slowly over a long term could simply buy or sell that same period and push the price to where they want it to be, at which point they could buy in bulk or sell in bulk. In any case, if you're looking at a stock and the price moves violently on a random day with no news and much more trading volume than usual, then there are usually one or two reasons that may be happening. That's also why Naver Finance includes this chart on all of their stock info pages. Local or foreign institutions doing buying or selling. In general, unless there's a Wall Street bets like GME movement happening where regular people from all around the world collectively bid up a stock, retail investors generally don't have the money to force a stock to move the way that they want it to on any given day. In fact, those who actually have the money to move markets in that way have a name. We call them whales. But they're rare, and if you're watching this channel, you're probably not a whale. In any case, most spikes in volume occur when institutions net buy or net sell off a position, and this may not always be based on something that happened to the company itself. See, institutions, including fund managers and holding companies, sustain their value by getting returns for their investors, usually in the form of buying and selling in and out of positions. Now, the beauty of low volume stocks, as we mentioned above, is that they can be more easily manipulated to provide that return that institutional investors are looking for. Let's quickly peep that Jim Cramer video that was popular a couple months ago.
And I think it's important for people to recognize that the way that the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down, then leak it to the press, and then get it on CNBC. That's also very important. And then you have a kind of a vicious cycle down.
Right.
And it's a pretty good game. And it can be played. You can pay for a percent or two.
Right, and then do you get long before Macworld and the expectation that the iPhone is going to be
down.
good? Right, and then you go back,
You
flip to the long
certainly got
side.
to use the other side.
Now, this is not to say that it's always market manipulation, which it more often than not probably is not. Sometimes institutional investors set parameters for their holdings or get specific prices at which they're willing to buy or sell. Sometimes they need to increase liquidity, so they sell their holdings that are trading sideways. Sometimes they get insider news about bad earnings reports, governance, liability, or financial issues and decide it's no longer worth it to stay in, or it's more worth it to enter a position than to not be in it. As usual, there is no one single answer. So how then should you approach days like this as a regular guy sitting on your buttocks staring at your app? Well, you have two options. 1. Trust your thesis. Or 2. Adjust your thesis. Now remember, if you're in a position, then you're in it for a reason. Whatever it is that institutional investors are doing should not bother you if the thesis under which you bought that stock has not been affected. For example, if you're looking at a stock that you bought when you thought it was undervalued and you had set a target price, but it's since dropped 7 or 8% in price even though it hasn't really changed much according to your thesis, then it should probably be either a buy or a hold for you. If it's a random day of high volume that shoots the stock past your target price for seemingly no reason, it's probably a hold or a sell. At the end of the day, it just comes down to the fundamental rule of investing. Know what you own and why you own it. If the volume has been consistent and positive, that's some good momentum on your side. However, if the stock has been consistent volume and net selling across a few days, then you may want to revisit your thesis. Is it a low volume stock untouched by institutional investors? Then maybe it's just retail investors getting impatient or bored. And if that's what you believe, then it may entice you to average your break-even price down and buy a few more shares. Is it a low volume stock that's recently sustained downward momentum on bad news? Consider if that news affects your thesis or not. If not, you know what to do. Ultimately, volume is just another tool in your kit to help you identify whether or not a stock is behaving rationally or irrationally, and whether or not that affects how you feel about the stock yourself. Remember, know why you own the stock and believe in your own due diligence. But, in any case,
always have an escape plan.
alright, that's enough for me. To be honest, I've been putting off the Discord thing because I wasn't really sure other people might want to participate more than they have been in the comments. It's pretty clear that a lot of people are looking for a place to talk about the KOSPI and the KOSDAQ and all the related markets, so if you're one of those people, head to the description box below, join up, and let's see where this takes us. I don't really expect chat volume to pick up very much at first, but hey, if we stick to it, maybe we can build a healthy community around us. In any case, good luck with investing, and take it all the way easy. Peace.